Hi, everyone. Welcome to ESOP Radio. There's positive news for the industry coming out of DC. Rutgers University released a study proving that ESOP companies increase productivity by 6 to 7%. And we're busy helping business owners navigate their strategic options. I'm Trevor Gilmore, CEO of Menke.
And I'm Ben Spadt.
So Ben, to kick things off, what you've been up to lately?
Yeah, out and about in the world. I just got back from DC where we were advocating for ESOPs, and I have actually closed a deal where a company sold 49% to an ESOP.
Nice.
And then behind the scenes, I've been working on our repurchase obligation software modeling, which we call our success score, and trying to make that better, more effective as a better decision-making tool. Trevor, what have you been up to?
Yeah, so Ben, I'm still coming down from the high of running the Boston Marathon last month. That was an awesome experience. Excited for the upcoming Chicago Marathon in October. So I need to start the new training cycle here coming up by early July.
Yeah.
I went to a few car events here in SoCal. I know you and I are both car buffs.
Absolutely.
Always cool to see all the awesome stuff out there. A lot of Porsches and so on. Went to Airwater specifically for any car buffs listening. And also, work-wise, been raising a lot of money for several clients. And that's given me intel on the current lending environment out there for ESOPs. So Ben, you're fresh out of DC. What did you do? What happened there? What are the key takeaways here for our listeners?
Yeah, well, personally, the first 2 days of the conference in DC was advocating for ESOPs, like I said a little bit earlier. And what we did was we went to both the House of Representatives and the Senate and talked to our Congress people about what bills are currently out there on the floor. One is for contribution limits and things like that as it pertains to ESOPs. Another is having government-backed loan to help fund these transactions.
Let's talk about that, actually. So government-backed loans, are we talking about like a mortgage? You know, the government backs certain mortgages and it's a 30-year, basically to make home ownership affordable.
Right.
Similar concept here is, hey, do a government-backed loan that possibly is a longer term.
Yeah, essentially, it's sort of, if you want to think about like the SBA, where you could get a traditional business loan, but rather than having assets to back it or a personal guarantee, the government says, we will step in and guarantee this loan. So it's typical to a government like an FHA loan or something like that, or USDA loan, but it's more business related. There's no increased costs outside of the administrative costs to taxpayers, and it just further incentivizes lenders, like you said, to lend to these types of transactions and lend more money. Right now we're seeing in a 100% transaction, we'll lend some of it. Perhaps we can get to a point someday where they're lending the entire amount.
Yeah, okay. Well, that's definitely promising. And would the government basically be guaranteeing loans that right now, the traditional banks out there lend to ESOPs? So basically that same pathway remains the same in terms of who's making the loan. It's just, hey, the government will come and guarantee and possibly go higher than the traditional 2 to 3 times EBITDA that we see out there on a senior basis.
Absolutely right. And so those are a couple of examples of what's currently proposed as legislation. And one of them was up for a floor vote in the House. And so, we're there saying, hey, this is coming up for a floor vote. Please either vote yay or, speak about it, learn more about it, that sort of thing. So there was a good number of individuals there representing all states. There was a couple from some territories it was interesting to see. And then the back half of the week was more of a traditional conference, a lot of continuing education. But because of the unique nature of it being in DC, we had some representatives from our government come and talk. And one is a newly appointed EBSA Undersecretary Daniel Aronowitz, who basically came out and said, ESOPs are no longer in the crosshairs. We're very pro-ESOP. We want to expand employee ownership, really soothing a lot of the concerns that we once had about these types of deals and setups being under more scrutiny from the government and from ERISA, and now they're looked upon more favorably.
That's great. Did he give any insights there on what's changed, in terms of the appetite, in terms of ESOP oversight, governance, so on? I know valuation is a big part of it. Also, following the procedures, documenting the process. ERISA, for those listening, ERISA is basically the governing body that oversees retirement plans. It's created in 1974, and it's very much a procedural driven agency. So do you
Absolutely.
talk much about that in terms of procedures, et cetera, especially as it relates to valuation?
Yeah, and EBSA is I guess, the teeth behind ERISA. It's the enforcement side of things. And what he talked about was, you're right, the adequate consideration, making sure that these ESOPs are being bought and sold at fair market value. And that was another thing we talked about with our legislators too, was defining what that means, more tightly defining what that means, as opposed to having it being open to interpretation. And so he said that, there are efforts in place to put some sort of guidelines in place as to what adequate consideration is. Another one was a lot of faith, and a lot of the lawsuits will just say, fall upon the trustee, for not acting on behalf of the benefit of all the shareholders in the ESOP. And for one reason or another, that was one that was in the crosshairs with EBSA, was targeting these trustees and really being aggressive at making sure that they're doing the right thing. And that has lessened. There's a lot more trust put in the trustee.
That's good. I mean, that's their name.
Exactly. Yeah. And then on the flip side are participant lawsuits as well, these plaintiff lawsuits that are suing the trustees or suing the ESOP for, not managing their funds correctly. And a lot more trust is being put on the shoulders of the trustee. Obviously, they're insured to the gills, but there are, that is their job. That's what they're there for. And hiring a good trustee is important. And then as far as those plaintiff lawsuits are concerned, I guess we're sort of not flying it all the way up the flagpole, making sure those are vetted, making sure they're not frivolous, things like that, before they advance in the courts. And so, it's a multi-pronged approach, but at the same time, the bottom line is ESOPs are looked upon more favorably. And so I think that's the major takeaway from DC, is that we are trying, it's been 52 years and we're still defining what adequate consideration is for these ESOPs. And so hopefully we're getting to a point where we have, if anything ever gets called into question, you can say, well, I followed the steps outlined in the code. Whereas now there's a lot of interpretation.
Absolutely. And this really zeroes in on the importance of hiring the right team to execute an ESOP transaction. Having independence, arm's length negotiation.
Very true. And it's, it's like building a house. You could be the GC, the general contractor, do it all yourself. But hiring somebody like yourself or me to quarterback that deal, be the GC. We know the players that are out there. A lot of these banks, you're raising money for these ESOPs that otherwise they wouldn't know existed or knew that banks could be this favorable in lending. We know a lot of trustees, every player in the space, and valuation companies. So it is good to effectively hire a good GC to make sure the deal is successful. And at the end of the day, an ESOP is a broad-based benefit plan for the employees to last into perpetuity. And that's what we want to create, a long-term, sustainable plan that benefits all employees.
That's fantastic. So yeah, great news overall. Sounds like your trip to DC was productive. You do anything fun out there? As you get out?
I didn't have time. So I came to DC straight from Washington State, where I worked with a water well drilling and pumping company to sell 49% to the employees. And so we shook hands, took pictures, all that sort of thing, celebrated in order to, help solidify that we are keeping jobs local. We are keeping businesses local. We're generating wealth with these employees. One anecdote, this is actually from DC, but I talked with an employee of an ESOP in Iowa who had worked there for 5 years. And she said her ESOP account was 3 times that of a 401k at a previous employer where she had worked for 10 years. And so these are dramatic shifts in retirement wealth we can create just from your hard work, blood, sweat, and tears. Going into your job creates this real benefit. And we're out there hopefully helping the rank and file. And so in north of Spokane, there was 65 employee owners now that have skin in the game. And it was huge. There were smiles across the room about how they felt like, now we are a part of this together and we're creating a brighter future together. And in only selling 49%, the owners were able to still maintain control, still run the business the way it was run the day before, now have 65 employee owners.
That's awesome. And
yeah.
Also the founders there too, they got a liquidity path there. So they're able to get some cash out for their 49% stake. Keep
Absolutely.
that money
It's a
in the
great way
community.
to diversify. If all your retirement, all your wealth is tied up in your business, which for so many of these founders it is, it's a great way to get chips off the table, to diversify, to help start that succession plan or continue whatever succession plan you had in place. Now, Trevor, I've been talking way too much on this early going, but you've been raising a lot of money for these deals that we're doing, these transactions. What trends are you seeing in the banking and finance space?
Yeah. So overall, most banks are all in on ESOP lending. So I've noticed a huge shift past couple of years. A lot of the regional banks out there, even the large nationwide banks, have sophisticated ESOP teams and they're all in on ESOP lending. So seeing very competitive terms out there and just overall hunger to lend money. So that is bright news for the owners of companies looking at the ESOP option and saying, hey, how do I get some cash out, not actually finance this whole thing on my own, which that traditionally has been one of the key ways ESOP deals are financed. So as far as terms go, we're seeing interest rates very competitive. Think, so for a little bit over 1 to 2.5, depending on the company size, their balance sheet, and so on. So let's translate that to interest rates. That basically means somewhere between 5 and low 6s right now. And again, prime right now is 6.75%. So we're talking about senior loans for ESOP transactions that are well below prime.
Right. And that's atypical to what has happened in the past. And in the very recent past, people have been sort of shy or a little hesitant to lend at all, let alone at a rate that is that favorable.
Yeah, exactly. And also we're seeing ESOP-friendly covenants out there too, in terms of the cash flow metrics, making sure, hey, that the bank understands what the ESOP is. There's a big non-cash component to it, as you and I know, but this is getting on the weeds. Yeah, in the beginning especially, that ESOP internal loan. So being able to look at the actual real cash flows of the company and make the decision based on that. So we're seeing that. So it's been a very positive shift overall, and promising too. So it's been fun too, because showing these options, finding the right long-term partner who's going to grow with their clients, during this process, it's been fun.
Have you seen it specific to one particular industry or multiple?
Yeah, so across all industries, we do a lot in the AEC, architecture, engineering, construction. We do a lot in that, but then on top of that, we work with media companies. We work with manufacturers. So one of our clients, medical manufacturer, awesome business, based in California, been in business 35 plus years, and very innovative, a very clean balance sheet. And we see that with companies that go ESOP. Typically they're operated very conservatively, not much debt, reinvest in the business, reinvest in growth, reinvest in the people. And then that tends to mean, hey, it's going to be a good company to go ESOP. And then on top of that, positive signs for great bank terms as well, because that's a bank stream client, to have that sort of fact pattern there.
Absolutely. Absolutely. Yeah. When you start with a good work product like that, good financial statements, a healthy balance sheet, it makes everybody's job a little bit easier. It makes ours, when it comes to designing and installing the ESOP, makes our job easier, makes the banks easier, the credit underwriters, and they know what they're looking at. They feel confident that they're lending into a good opportunity. I say often, more so than the numbers themselves, a well-run company is just as important or more important in order to have a successful ESOP. And this is, in a successful lending scenario too.
Absolutely. And another trend too, Ben, out there on the banking front is more and more regional lenders and the large, as we talked about, are actually recruiting ESOP talent, to be part of their banking. And that's huge because these companies realize that ESOP companies, or I should say these banks realize good ESOP companies are going to be awesome banking clients, stable cash flows.
Yeah, right. Because
staying independent.
You're absolutely right. You're not just going to get that ESOP loan, but there may be a line of credit. There may be other products that they have that.
And
can help build the bank's portfolio with that one client. And you hit the nail on the head. A lot of these regional banks, they lack the understanding, that knowledge of what an ESOP is and how an ESOP works. So they are going out and they're hiring those with experience to help shore up those deficiencies so that they can feel confident lending in these situations. And you're right, we are seeing more and more in that. You see LinkedIn all the time. This person's changed from this bank to the other because of that ESOP experience.
Yeah, that's never ending. But yeah, we're seeing also that ESOP companies default on their loans a lot less. I was speaking with a banker and private equity firm or PE-backed firm. In essence, they did a huge dividend recap, pulled a bunch of money out, and then defaulted right away. It's like, well, that's not good. You don't necessarily see that with ESOP companies, because it's very much the long-term cash flows. How do we make this thing sustainable for the long run? And then another anecdote too. One of our clients, we were raising capital for their existing bank, small regional bank. They literally got on the phone with us, and said, I don't think you should do the ESOP, don't do it. And it's like, well, guess what? They lost a client, because one of the actual banks who know ESOPs, and this was an awesome prospect, solid balance sheet, solid growth. You look at the metrics, that the bankers all care about, and this company passed them all with flying colors. They're a bankable client all day long. So, with that sort of posture, they lost a client. So, good times for sure. And it's exciting to see that because, in the past, that wasn't always the case. Now we're seeing many more banks out there interested in ESOPs, all in on ESOPs. Even the tone at the top, CEOs of these large banks too, now understand what ESOPs are.
That was both surprising and refreshing to hear. But you said something important about these ratios that banks concern themselves with. And I just wanted to say that as part of our ESOP fit analysis, where we're looking to see if, is your company a good candidate for an ESOP, we look at those as well so that we can talk the talk when it comes time to interview these banks and make sure that we're getting competitive terms. We want to know the company shoulder this debt and how easily. And then when we know, we take that to the banks and say, hey, we've got a great prospect here. Here's all the metrics that you would be concerned with. And then they're easy, jump right in and you might have a term sheet in a week, as opposed to if we have to figure that out on the fly, it takes a lot longer and sometimes the terms are worse. So, I think we offer a great value add there to help bridge that gap sometimes.
Yeah, our role is to find the best banking partner for our clients, right? And knowing them inside and out, knowing the financial ratios, the fundamentals, everything. So, but yeah, hey, Ben, that was awesome discussion today. Thanks everyone for joining us. That's it for today. Stay tuned. We have new episodes coming out. We love talking about ESOPs, valuation, finance. Follow us on your favorite podcast channel, whether that's Spotify, Apple, YouTube, or even check out our website, Menke.com. And Trevor Gilmore, you can reach out to me on LinkedIn under my name. Same thing with Ben Spadt. Have an awesome day, everyone. Take care.
Take care. Bye-bye.